Welcome back to Wonder Why Quiz. Are you financially literate enough to get a perfect score? Or is your bank account secretly in trouble? Let's find out. First question. Which company has made investors the most money since its IPO? Coca-Cola, Apple, or McDonald's? You nailed it! It's Apple. Did you know? Apple has become one of the greatest wealth creators in history, turning relatively small early investments into millions. All right, that was just a quick warm-up. Next, which asset lost the most value during the 2008 global financial crisis? Gold, U.S. housing, or government bonds? Well done. B is the correct answer. Fun fact, the collapse of the housing market triggered the financial crisis, wiping out trillions of dollars in wealth. Next, which billionaire is famous for saying, "Be fearful when others are greedy, and greedy when others are fearful"? Elon Musk, Warren Buffett, or Ray Dalio? Warren Buffett. Easy peasy. Successful investors often buy when everyone else is panicking. Next, which investment would most likely double your money first if each earned a constant annual return? 5%, 8%, or 12%? "12% is the correct answer. Using the rule of 72, 5% is approximately 14 years, 8% is approximately 9 years, 12% is approximately 6 years. Did you get it? Next, which famous company was once close to bankruptcy before becoming one of the world's most valuable? Apple, Visa, or Nike? Absolutely right. The answer is Apple. In the late 1990s, Apple was struggling so badly that many analysts thought it wouldn't survive. Next, which everyday habit costs more over 30 years, assuming 8% annual investment returns? A $6 coffee every workday, one overseas holiday every 2 years, or buying a new phone every 3 years? It's A. Why? Investing the money instead of spending it allows compound growth to dramatically increase its future value. Nice work! Next, which of these companies generates the most annual revenue? McDonald's, Apple, or Netflix? You got it! It's Apple. Apple's annual revenue dwarfs both McDonald's and Netflix, reflecting the incredible scale of the world's biggest technology businesses. Next, which investment has historically provided the highest average long-term returns? Cash, residential property, or stocks, equities? Awesome! It's stocks. Over long periods, diversified stock markets have historically outperformed cash, bonds, and many other asset classes. Next, which investment has delivered the highest average annual return over the last 100 years? Gold, U.S. stocks, or government bonds? B is the correct answer. Despite countless recessions and crashes, stocks have historically outperformed most major asset classes over the long run. Did you guess it? Next, which U.S.-listed company was the first to reach a $1 trillion market value? Microsoft, Apple, or Amazon? It's Apple again. Easy. Fun fact, Apple crossed the $1 trillion milestone in August 2018, becoming the first U.S.-listed company to reach that valuation. Let's keep going. Which of the following billionaires became a billionaire at the youngest age? Elon Musk, Jeff Bezos, or Mark Zuckerberg? The correct answer is Mark Zuckerberg. Zuckerberg became a billionaire at age 23 in 2007 following Facebook's rapid rise. Next, if inflation averages 3% a year, what happens to money kept under your mattress? It gains value, it roughly keeps its value, or it loses purchasing power. Yep, it loses purchasing power. Even though the dollar amount stays the same, inflation means it buys less over time. Next, which costs more over 30 years? Paying an extra 1% in investment management fees, buying a new phone every 2 years, or paying for a streaming subscription? It's A. A seemingly small 1% annual fee can reduce your investment portfolio by hundreds of thousands of dollars over a lifetime due to compounding. Good job! Next, which country has the world's largest stock market? China, United States, or Japan? United States is the correct answer. Perfect answer! The U.S. stock market accounts for roughly 60% of the total global stock market by value. Stay with me. Which investor is famous for turning $5 billion into more than $1 trillion in shareholder value through Berkshire Hathaway? Ray Dalio, Warren Buffett, or Carl Icahn? B is the correct answer. Sweet victory! Buffett achieved this over decades through disciplined, long-term investing rather than frequent trading. Next, which company generates the most annual revenue? Apple, Walmart, or Tesla? It's Walmart. Did you know? Walmart generates well over $500 billion in annual revenue, making it one of the world's largest companies by sales. Next, which is generally considered the better strategy for most long-term investors, trying to time the market, investing regularly over time, or holding cash until markets crash? Regular investing, often called dollar-cost averaging, helps remove emotion from investing and reduces the pressure of trying to predict market movements. Awesome possum! Let's keep going. In purely theoretical terms, which asset produced the highest return between 2010 and 2020? Bitcoin, gold, or oil? You're so good! It's Bitcoin. Purely by price appreciation, Bitcoin vastly outperformed gold and oil over this period. In practice, Bitcoin was extremely difficult to access and highly volatile. Next, which major U.S. investment bank collapsed during the 2008 global financial crisis? Goldman Sachs, Morgan Stanley, or Lehman Brothers? Lehman Brothers is the correct answer. They filed for the largest bankruptcy in U.S. history in September 2008, with over $600 billion in assets. You nailed it again! Next, which investor famously made around $1 billion betting against the U.S. housing market before the 2008 crash? Warren Buffett, Michael Burry, or Peter Lynch? Burry spotted weaknesses in subprime mortgages years before the crisis, a story made famous in The Big Short. Next, which investment would most likely grow to the highest value after 30 years? $50,000 invested once, $500 invested every month, or $10,000 invested every 5 years? Absolutely right! B is the correct answer. Regular investing combined with compound returns often beats making occasional lump sum contributions of a similar total amount. Are you ready for the next one? Let's go! As of 2024, which of these retailers had the largest market value? Coca-Cola, Costco, or Nike? Yep, it's Costco. Costco's combination of membership fees, customer loyalty, and steady growth pushed its market value well above Coca-Cola and Nike by 2024. Nice guess! Next, which country owns the largest amount of U.S. government debt? China, Japan, or United Kingdom? It's definitely B. While many people assume China is the largest holder, Japan has held that position in recent years. Next, which investment saying is backed by decades of market history? Buy high, sell low, time in the market beats timing the market, or the safest investment always gives the highest return? It's definitely B. No doubt about it. Missing just a handful of the market's best performing days can dramatically reduce your long-term investment returns. Let's keep going. Which best describes diversification in investing? Concentrate funds in top performers, spread investments across asset classes, or only invest during rising markets? You got it! It's spread investments across asset classes. Diversification reduces the impact of any single investment performing poorly. It's one of the most widely accepted principles in long-term investing. Next, which statement is most accurate in real investing? High returns always mean high risk, lower volatility always means higher safety, or past performance does not guarantee future returns? Perfect answer! It's C. This is a legal and financial reality. Markets can defy patterns and expectations. We're almost there! Which asset class has historically had the worst return after inflation over long periods? Cash, holding money idle, global equities, or residential property, averaged globally? Right again! The answer is cash. Cash loses purchasing power over time due to inflation, even if the number stays the same. Next, which scenario most increases long-term wealth? Waiting for a market crash before investing, investing early but irregularly, or starting early with small, consistent investments? You nailed it again! C is the correct answer. Time in the market beats perfect timing more often than not. Next, which investor behavior typically leads to the lowest returns? Buying and holding index funds, frequent buying and selling based on news, or investing fixed amounts monthly? Aha, it's frequent buying and selling based on news. Emotional trading often leads to buying high and selling low. Easy. Last one. Which fee hurts long-term wealth the most in compound terms? A $10 monthly subscription, a 1% annual investment fee, or occasional transaction fees? A 1% annual investment fee. Percentage fees compound silently and scale with portfolio growth. How many questions did you get right? Share your score in the comments. Pick up your next challenge, and don't forget to like and subscribe.